Welcome to Love and Leisure. Today we are going to be discussing what should be simple, but it's often complicated. We'll be talking about refinancing your mortgage and the dynamics of relationships.
Right. I want to share a story. The story is about Tom and Maria.
Okay.
Interest rates dropped, and Tom was convinced they should refinance immediately. Maria, on the other hand, wanted to wait and see if interest rate would drop even further.
Okay.
What started as a financial decision became a 6 month argument that nearly drained their marriage. Now, it's
Yeah.
interesting because, Tom wanted them to do it right away. 6 months down the line, they hadn't made the decision, right?
Yeah.
Maria is still waiting for the interest rate to, keep dipping further, right? Because for her, it makes sense to get the best, right?
I think I'm just not a fan of the back and forth, right?
Right.
Like nobody knows what the Bank of Canada is going to do. And I understand from Tom's perspective, like it's expensive, rates were high before, now rates are going down. And I get from, the wife's perspective too, it looks like she's like, you know what, like rate is going to fall. It's probably or may fall even further. But again, like nobody knows because nobody really does know.
Yeah.
But I'm not a fan of like the back and forth because sometimes you may just want to wait and see what's gonna happen. It's not expensive. Like it could be expensive, going back and forth, like, changing from the fixed to variable every single time.
Yeah.
Or like maybe refinancing every single time and all like, just refinancing every single time. Like just, jumping ship every
Yeah.
time.
Yeah. It's like you said, no one really knows. And let's not forget that the whole interest rate is driven by the inflation,
Yes.
right? All right. So what if waiting further results in the Bank of Canada switching gears in the opposite direction and then
Yes.
rate begins to climb? Then
Yeah.
they will still be back to the same blaming game where
Yeah.
Tom will be like, I told you we needed to do this right away. And
Exactly.
now the rates are already going back up, right?
Yeah.
So to your point, I think it's all about making sure whatever they did or whatever in let's just make generalize this now, whatever decision you want to make regarding refinancing, you need to identify if it's really worth it in the long run. How much are you paying in penalty if you're breaking like a
Your
mortgage?
closing costs
Yeah.
too, because you are
Right.
going to pay lawyer fees and pay all these fees. Is
Right.
it even worth it? Like, would you break even? Like, would it be what if you look at yourself in 24 months, for example? Would you have saved the amount that you use in closing?
Yeah.
Would you have saved that amount, or like
Refinancing,
are
yeah.
you just going to be at the same spot?
Mm-hmm.
Like, is it that you're just putting, because I could also see Tom's issue in this situation. I think paying that the money that you have to pay upfront for closing costs and everything is also a concern for him.
Yeah.
Right?
Yeah.
It's also a concern, like, most of the time. It's like, we're paying all this money to refinance when we could have just waited. Right?
Yeah.
That's another thing.
Right. And that's what's really happening a lot right now because I have mortgage agents that kind of, talk to, chat with. And I think market is booming for them right now with the whole
Yes.
refinancing game. Probably someone, got their mortgage 2 years ago when
interest rate was high.
was high. Now things are low and, people are actually refinancing. But then you also look at the flip side of things. Prior to now, things were really low.
Yeah.
And when it started climbing, some people decided to, not do anything about it.
Yeah.
And they had to wait until it was probably like almost 3 points.
Yes.
Right? Higher than,
yeah.
When I say 3 points, I mean like 3.0.
3% higher.
Which, 3% higher before they decide to make the move. So there's something we call analysis paralysis, whereby you are analyzing the market and saying, oh, interest rate, I kind of feel it's still going to go down.
Yeah.
And then you don't make that move, right? And then boom, everything is already...
It's a risk thing, whichever way you go. And I think, for me, I think sitting down to analyze, is it even worth it? Especially when you've already gone into, like, you already have a mortgage and you have an amount that you're paying, right? Is it worth it to break that mortgage and pay all this penalty
Yeah.
just because you're saving 1% or like 0.5%. I think there's a general rule that if you're going to save like 1% in interest, then it makes sense for you to
refinance.
refinance. But again, you're also looking at the closing cost and all other expenses, the cost of breaking the mortgage.
Yeah.
You need to understand if it works before you run to the bank and go and break your mortgage.
Yeah.
And refinance.
Yeah. And then are you gonna keep breaking every single time?
Exactly.
Because if let's say the interest rate went down by 1%.
Yes.
And then
are you going to come
you
back?
refinance, and then 6 months down the line it went further down by another 1%.
Yes.
How many times are you
How many times are you going to spend money refinancing and jumping ship and doing all that? I think these are things that you need to evaluate as couples before you even, make this decision. I think the other thing with refinancing is, what's your situation? Like, so this is another thing with refinancing that I wanted to mention is like, okay, so we're talking about interest rates, refinancing as a result of interest rate drop, right? But let's talk about refinancing when it's right to refinance. So like
when your mortgage is due for renewal.
Due for renewal. I think a lot of people forget that you will be reevaluated again and you don't own the home. It's not like, oh, I've already bought the house, now I own the home. Nobody's reevaluating my situation again. At the point where
you actually own the home, it's just that you haven't paid for it outrightly. You haven't paid for it outrightly. So you still owe the bank.
So the bank is still going to reevaluate your situation when you're trying to refinance. I think most people forget that.
Yeah.
Because you just see all of a sudden people are trying to refinance. It's like,
right.
The husband now has credit cards that are over the roof. They probably bought 2 new cars. Even some people have filed for bankruptcy, consumer proposal. All these things, I feel like people are making decisions as if no one is checking anymore.
Yeah.
And I also think, we've had this conversation before when we're talking about credit score. I think communication is really good.
Yeah.
Because a lot of people now, is like you're trying to refinance and you find out that your spouse has this huge debt that they never talk to you about. I think maybe people think that 5 years or 3 years is a long time.
It's a long time, yeah.
And it's never going to come. So like I have a lot of time to do this. Or I don't even know the thinking. But all of a sudden you like, I won't say it's all of a sudden, but 3 years, 2 years, 1 year down the line, 5 years down the line, it's time to refinance and your situation has changed a lot.
Yeah, that's why you find people, being in a very tight spot at that point. For people who desperately want to keep their home, they end up going to like, oh, let's do private mortgage for a year and try to see how we can build things back, probably, get the credit back at par. With what the bank will be okay, right, to probably give them a mortgage, but then creates a lot of chaos. It creates a lot of pain and stress, right? So I think it's something to really watch out for, something to really look out for. Refinancing is a thing in Canada. In the States, maybe not. I think in the States, once you buy, you're like...
I think it's 30 years.
Yeah,
like right. Some people like... So I think for the length, not even 30 years, I think for the length of your mortgage, that's... it's after your amortization that you refinance. So you don't necessarily refinance along the way we do.
You only refinance maybe if the rate drops and you want to get better.
Exactly. But in this situation in Canada, you have to refinance every time your mortgage is up. Like whether it's a 3-year term you did, or a 1 year or a 2 year or a 5-year time, you would have to answer to the bank regarding your finances again.
Yeah.
And one of the things that I've also seen very often is that you bought a home now, 2 years down the line, you're like, oh, now I want to follow my passion. I'm starting a business of my own. Oh, I've really loved this. I'm going to start. And that as a business owner, it takes you like 2 years for you to even balance at all. Right? So now you're making these huge expenses because, of course, business, you are just starting. You have to, spend a lot of money. And, you've spent all this money. You now have huge debt.
Yeah.
And it's time to refinance.
Right.
It's time to refinance on your notice of assessment.
Yeah, you probably don't have a lot because... like you said, first 2 years, you're probably doing a lot of, capital intensive projects, buying gadgets, setting yourself up. So your net income is probably very low,
It is.
and the bank will qualify you based on your income, right?
Yes, based on your income. So now you can't qualify. And this is where the blame game starts, especially like as couples. Like it's more like, okay, now, maybe you shouldn't have followed your passion in the first place. Maybe you shouldn't have started business, But I think these are conversations people need to have, more often than not, because it's going to help a lot,
right?
With this type of discussion, with this type of situation. It's going to help.
And just to kind of, you said something, and that I would just, for me, I always want to put some extras in there. So for business owners or people who started business, let's say 2 years down ago or something, it doesn't mean that
mean you can.
It just means that your qualification, or better still, the lender you can get a mortgage from or get refinancing from, might be slightly different. So you may end up not being able to go with the A lenders, but there are some B lenders who are okay with, let's say, your financial statements, right?
Yeah.
So it is actually see that the business is doing well,
but
right?
Again, like you just started a business, your business may not be doing well.
So you probably need a 2 years NOA. Yeah, pretty much. So something to watch out for, right? You don't say, oh, refinancing is coming up next year, and then you feel it's time to start a new passion.
Start a new passion.
Maybe hold off.
Maybe wait a little bit.
Yeah.
I think those are the kind of advice that we give to people too. Like, you're starting a business, is cool, but maybe you need to wait a little bit because your renewal is coming along, or like, you're trying to buy a house or whatever it is.
Yeah.
Again, what we're just trying to say is that when you buy a house, that's not the end. You're going to have to refinance. So you need to prepare for your refinance also, as you have prepared for buying the home initially.
The financial stewardship needs to be up. Like you need to ensure your financial stewardship is 100%. Let me put it that way. So the bank is going to check everything.
It's going
to
to
check before. Everything. Oh, is your credit score still good? Oh, do you still have the income? Or what's your debt ratio? How many debt do you have? Do you have 100 cars, right? Sitting under, you're gonna check all that. So it makes sense to be cautious. Yes, you bought a home. Yes, you've closed on the home, but you know that there's a milestone, there's a checkpoint. It's more like a checkpoint every 5 years. And the bank is smart enough to do that, because they don't want what happened, in 2008 to repeat itself, whereby, they just want to make sure you are still okay, right? To like you won't default on that mortgage down the line. So they want to check again. Or in 5 years, let's see, are they still okay? Oh, they're okay, let's give them again. Or now they've paid down this mortgage to this particular amount. Okay, at this 5-year mark, 3-year mark, let's check again. Are they still good to go? Are they not good? If they're not good to go, then are we willing to go ahead? If we're willing to go ahead, maybe we'll give them higher interest rate, because some banks will still do that. But then your interest rate will be higher.
Will be higher.
Right. Some bank will tell you outrightly no, and then you have to go look for someone else who is willing to take on that risk.
Yeah. Okay.
All right.
If you are enjoying these conversations, please like, share, comment, subscribe to our YouTube channel. And
we'll see you next week.